I'm Charlotte McLeod with the Investing News Network, and here today with me is John Cash, CEO of Energy. Just a reminder before we get started that if you enjoy this interview, make sure you subscribe to our channel. John, thank you so much for joining me today. It's great to see you.
Hi, Charlotte. It's nice to meet you online and looking forward to our conversation.
I think it'll be a fun one. Our audience really enjoys hearing about the uranium space, and there's definitely a lot to talk about. Since it is our first time talking, I thought the place I would start is to just ask you broadly, where do you see the uranium cycle being at this moment?
Right now we are facing a pretty significant supply of shortage. Mine production is at a low point right now, coming out of COVID, coming out of the impact from Fukushima. And also we've been feeling the impact of a lot of state-owned enterprises kind of flooding the market. And so that really drove down prices for a long time and really shut down a lot of production globally, especially in the Western world, the US, Canada, Australia, even some of the African mines. So we're starting to come out of that, but there's a significant supply shortfall compared to demand from reactors. And that demand from reactors is really scheduled to grow considerably larger over the next few years as the world continues to move toward nuclear power.
Whenever I speak to people in the uranium sector, it becomes clear very quickly that there are a lot of positive catalysts coming down the line. What would you identify as the top catalysts in your mind?
Well, I think there are a couple of things that come to mind very quickly, but I'll focus on green energy. The world really has come to the recognition that nuclear power is carbon free. At the same time, they're coming to the recognition that while renewables have certainly great things about them, they also have significant downfalls. Namely, it can't be stored very effectively. So in circumstances where you want reliable baseload carbon-free energy, really you've got two things you can go to. You can go to nuclear or you can go to hydro. And most of the dams that can be installed on rivers have been installed already. So that leaves you with nuclear power to really fill that green energy baseload energy. So that's where the world's going. And that's why the world is really building out reactors in China, Finland, South Korea, even here in the US and countless other countries around the world.
Okay, I think that's a great point. And another catalyst I want to bring up is utilities contracting, which you started to mention as well. So this is really important, but it's a notoriously opaque process that people may not be able to know much about. I wanted to ask what light you could shed on that, considering that Energy is actually signing contracts with these entities.
No, you're spot on. It is a very opaque market, and the utilities like it that way. I think it makes them feel like they can work with suppliers and get the best deal without interference from the outside. But right now, it looks like there are really two markets that are developing. There is a global market and a global price that's published. And then there's also a Western price. And because we are a Western producer in a very safe jurisdiction here in Wyoming, USA, we get a premium for our pounds. So what we've seen in our contracting is we're not getting the spot price. We're not even getting the long-term price. We're getting a price that's above and beyond that because utilities and nuclear companies around the world, they want that security of supply. There's so much uncertainty in the world right now that they're willing to pay for that certainty, and we're able to provide that. So yeah, it's opaque, but there are definitely two markets that have developed. And we're glad to be on the upper end of that and enjoy really high priced contracts for production from Lost Creek.
Certainly. And speaking about contracts that Energy has signed, I believe you also have one with the US government for the uranium reserve. I hope that we could talk a little bit about that and the importance of that reserve in establishing the US in terms of supply chain security.
Yeah. So a number of years ago, President Trump signed into law the uranium reserve. That was back in 2020. And the intent of that was to help create a bit of a backstop for US utilities, just in case there is a global disruption of supply. And keep in mind, this was before Russia invaded Ukraine. But this was kind of predicting that something like that could happen and ultimately could impact US utilities and the ability to keep a good supply of electricity to their customers. So anyway, that bill, it allocated $75 million And the Department of Energy was charged with going out and buying pounds of uranium and also buying conversion services from US providers. And so we were successful in bidding into that program. We sold 100,000 pounds to the Department of Energy earlier this year. We got a price of $64.47 a pound, which is an outstanding price. We were very happy to get that. We've since been paid for that. Unfortunately, at this time, that program, it looks like it was a one-time purchase. There's no more funding left in that program going forward. However, Congress is considering, I don't know how seriously, but there is discussion on Capitol Hill about expanding that program for additional years. So we're waiting to hear on that. We'll see if that comes to pass. But our company, although we participated in that initial phase of the program, we don't rely on the US government. That's not our business plan. Our business plan is to sell production to global nuclear fuel companies, utilities. And so that's really our focus. We think it's a little bit dangerous to try to rely on government sales. They're too sporadic, not reliable. So we're going to take the more commercial approach.
That does make complete sense. And another element that you started to talk about that I want to ask you about is the Russia-Ukraine war. So this has definitely drawn supply chain security into focus around the world, not just in the US. And it's really made people, I think about how much we rely on Russia for uranium, not just actual uranium, but the processing side of it as well. So can you talk a little bit about that, and if we may start to see the US, for example, start to step away from there, because I don't believe we've quite seen that at this point.
Yeah, absolutely. In one of your earlier questions, you said you asked about what are the top things that really are driving the market. And I talked about green energy, but I could have just as easily said geopolitics, especially Russia. Yeah, Russia is a major miner, not a refiner, but a miner or refiner of uranium. So they do a lot of conversion and enrichment. They are a major global supplier. I've seen a number of different statistics on how much they provide, but roughly 40% of conversion and 40% of enrichment come out of. You think, okay, no big deal. If that supply gets cut off, the Western world would simply step in and backfill that, and we'd be back up and running in no time. We could rely on inventories in the interim, but that's not the case at all. The Western world simply does not have the physical infrastructure to replace a supply disruption if that were to happen. So I think it would be a significant scramble to try to replace that infrastructure. The enrichers maybe have a bit of an upper hand on that because they could begin to overfeed in their process. That would actually help us out because that means they would require more feedstock or more yellow cake to go into the process. So we would enjoy that. But the conversion services, I mean, it's very limited. Here in the US currently today, there are no converters up and running. Now, Converdyne is working on restarting their facility. I think they intend to start very quickly. But that is the only physical infrastructure on the ground for conversion in the US. And then in enrichment, Urenco does have one plant down in New Mexico, but that's the extent of enrichment in the US. So if we wanted to build out more capacity in North America or in Europe, it would take time and a lot of money. It's doable. It's been done before, but it's not something that we can just flip the switch and have it in 6 months or a year. We're talking probably about several years and potentially billions of dollars to build out that infrastructure. So that puts the US utilities and European utilities in a very difficult position. No one really wants to do business with Russia at this point, but we don't have good alternatives. Right now, Congress, the US Congress is looking at cutting off that supply. They're talking about having a waiver process as part of that. So if a utility can't get supply somewhere else, they could still go back to Russia, kind of as a pressure relief valve, if you will. I don't know if that even works, though. I don't think Vladimir Putin's going to say on one hand, okay, you cut us off, but oh, you're desperate for pounds now or desperate for enrichment. Okay, I'll help you out. I don't think he's that nice of a guy. So I don't know if that thought process is really going to work. But anyway, Congress is taking a hard look at it. The U.S. is trying to take some steps to move away from Russian supply. Ultimately, that can help us out as uranium miners. And we're looking forward to that happening. Morally, we believe it's the right thing to do.
Okay, I think we should talk a little bit more about the company's plans right now to ramp up production, because I'm pretty curious about that process and what you would want investors to know as you're going through it.
Yeah, so we've got two flagship properties. Lost Creek is the first one. It's been in production now for 9 years, and that's the one we're looking at ramping up production because we've been able to layer in some very good high-priced contracts to justify that startup. But I would like to convey that we've only got 600,000 pounds under contract. That's only about 25% of my plant capacity there at Lost Creek. So we've got a lot more room there to grow and layer in additional contracts. Beyond that, we can start contracting at Shirley Basin, our next property. It's fully permitted, but we haven't constructed it yet, but that can be done very quickly at a very low capital cost. So we're in a good position there to ramp up. We've announced that we're drilling, we're constructing, and within a matter of weeks now, we intend to bring in additional flow into our processing plant and begin to ramp up that production. This year, we'll produce about 200,000 pounds at Lost Creek. It's not that much, but that's what our contract book calls for. Next year, we ramp up to 600,000 pounds, and we'll stay at that level to fill the contract book for the next 5 years. There is an option to extend one of the contracts for an additional year beyond that. So we've got in a really good base layer of revenues from those contracts that puts us in a really good spot. And at the same time, we've got a lot of room to grow that contract book as prices go higher. And that's what we're looking for now, layer in additional higher priced contracts.
I know price is always a tricky one, but in uranium, I think we do all agree the price is going to go higher. What would your outlook be for 2023 or perhaps even beyond that longer term?
Yeah, it's really hard to predict. I mean, you've got two dynamics going here. You've got the basic fundamental supply demand issues. Beyond that, you've got the geopolitics. We've talked about both of those. When you look at just supply demand fundamentals, that alone, I think you're going to see several dollars a year in the spot market, maybe a $2, $3, $4 a year increase year over year going forward until mine supply is able to catch up. And that's going to take a number of years to get there. Long-term pricing, similar story. I think you see $2, $3, $4 a year increase for a few years while the miners try to catch up. But that's ignoring the geopolitics. If you throw the geopolitics in there and the worst case happens, and let's say those sanctions on Russia are enacted, somehow that encapsulates Kazakhstan, Uzbekistan, Russia exerts its influence there, then I think you could see $20, $30, $40 a pound increase within weeks. That's impossible to predict. Who knows what Vladimir Putin's going to do? I'm not sure he knows what he's going to do tomorrow. So, but that possibility is out there, and people should be aware of it. I watch the news religiously, watching what's happening in Ukraine, watching what's happening in the U.S. Congress in response to that, and just trying to get a sense of what's going to happen. But those are the dynamics at play. But all systems right now look like go. Looks like the price is going to be moving higher. I think consistently that's what the producers are predicting. I think pretty reliably that's what the utilities are expecting as well. And certainly if you look at some of the major trade press as well, like UX Consulting, they're looking at fairly significantly higher pricing going forward as well. So I won't say it's unanimous, but it's a pretty strong indication that pricing is moving higher.
I think you're definitely right about that. And I know investors are really hoping to see that as well. There's a lot of people, I get the sense, that have been in uranium for quite a long time who may be feeling at this point a little impatient, although we have actually seen over the last couple of years quite a bit of price growth. What would you say to those people who want to see it move a little bit quicker?
Yeah, I mean, obviously the market's beyond our control. I wish I could control it, but I can't. But would just encourage those investors to hang in there. When you're looking for companies to invest in the uranium space, look for those tried and true proven producers. And I'd like to say UR Energy, we are one of those companies. We've been producing for a long time. We've got very low cost, C1 cash cost around $16 a pound. all-in mine site around $33 a pound. We're seeing a little bit of inflationary pressure on those numbers, but nothing too bad. But we believe we can compete with just about anybody in the world, especially in the Western world. So would just encourage those investors, stick with us a little longer, make sure you invest in good, solid companies. And I believe we tick those boxes.
You know, when it comes to uranium investors, I do find that they tend to be quite well informed. But I did want to ask if there are any misconceptions about uranium that you would want to dispel for people, things like that, that you have on your mind.
Yeah, I think there is some confusion, maybe especially with some retail investors who are not practiced and haven't been in the uranium space for very long, that there really are two markets when it comes to buying and selling uranium. One would be the spot price. And everybody talks about the spot price, but really spot price only represents about maybe 15% of total sales, maybe 20%. So it's a relatively small percentage of overall sales, and it really doesn't represent the bigger market. But the long-term contracting, that takes up 85% of the market. That's where we play as a miner. That's where a lot of the miners play, is in that long-term contracting. Certainly, that's where a lot of the utilities play. So for anyone watching the video today that's looking at getting in the space, be aware there are two markets. There is a spot price and a long-term price, and the two markets have very different uses and very different sizes.
Okay, I think that's a really helpful point for people to remember. That's all I have for you today. But before we wrap up, I want to ask if there are any final thoughts you had on the market or points that you would leave people with about the company.
Yeah, you bet. One other item I just would bring up very quickly is we are engaged in some research and development, and would encourage the viewers to keep an eye on that. Our research and development really focuses on reducing our environmental footprint. We're very serious about that, but at the same time, lowering our cost of production. So we have two ongoing projects right now that are focused on that, and we're ramping up. So we've had to avert our attention away from that and to ramp up for a little while. But as we get it through ramp up, we'll take our attention back to research and development. And we've got some great projects there that we hope to talk about some more in the coming weeks and months.
All right, that's great to hear. Well, thank you so much for coming on to join me today to talk about uranium and about your energy. It was great to get your perspective on the market.
All right, thank you, Charlotte. It's good to catch up with you.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is John Cash with Your Energy.